Bitcoin on-chain data is sending a clear message. Activity is rising, and history says this often appears before a major bullish move. Today, we break down the Bitcoin liveliness metric and what it could mean for the next market cycle. Liveliness sounds abstract, but it captures a simple idea. Are coins sitting still, or are they moving between new buyers and sellers at higher prices? The metric is built from the full transaction history of the Bitcoin blockchain. It increases when older coins are spent, and it drifts lower when long-term holders sit tight and refuse to move their stack. Analyst TXMC points out that Bitcoin liveliness has been climbing again. That means more dormant supply is flowing back into the market. Historically, that pattern appears during bullish phases, when conviction holders finally decide to take profit into new demand. It also suggests that fresh capital is stepping in to buy those coins at higher and higher levels. However, TXMC also warns that liveliness is not a simple trading signal. It often lags behind spot price because it takes time for long-term holders to act. By the time older coins are moving, the first leg of a rally may already be complete. So this metric is better viewed as a structural backdrop, not a green light to ape into leverage. Another on-chain researcher, James Check, adds important context. He notes that liveliness has been confined to a tight range for roughly 8 years. The cycle in 2017 stood out as a unique event. It was the first truly epic parabolic rally with broad retail participation. It also coincided with heavy spending of very old coins, as early adopters took profits and chased dividends from the Bitcoin Cash fork. Fast forward to the current cycle, and liveliness is pressing into new high territory again. According to Check, this shows how extreme the return of previously inactive coins has been in 2025. Long sleeping supply is waking up. That is a sign that early holders see current prices as attractive levels to de-risk. At the same time, the market has been strong enough to absorb that sell pressure without a full-scale breakdown. For investors, the signal is mixed. On one hand, rising liveliness confirms that demand is deep enough to pull old coins out of storage. On the other hand, it means experienced players are quietly distributing into strength. That is what mature bull markets look like. New participants buy the story at higher valuations, while patient whales rotate into liquidity and reduce risk. No single metric can predict the next move with certainty. Liveliness is a lens, not a crystal ball. Structural on-chain trends matter more than intraday noise. If liveliness keeps climbing while price consolidates, it may signal a coiled spring for the next leg higher. If it spikes while price falters, it could flag distribution and growing downside risk. Stay calm and prepared. This has been BlockBrief. Stay informed, stay ahead.